Let's get across the market open now. Joshua Barker joining us from RiverX. Josh, good to see you on this Thursday. Markets overnight. Just, I guess, investors sitting on their hands trying to work out what comes next. Obviously, given we've seen quite an impressive recovery, obviously, off the back of the unwind of that Middle East trade.
Yeah, no, there's a fair bit happening, and there's a fair few data points coming up that I think the market's just pausing ahead of. It's been a very sort of volatile little period, and there's been lots of news headlines that are sort of changing each day and sort of conflicting each other. So it's very hard to, I guess, pick a direction, and many short-term views are sort of picking different directions depending on the day and the news articles that are coming through. So we're really just trying to focus on I guess the market and company fundamentals in real terms at times like this. Like we've seen a lot happening, but it has really just distracted the market quite a fair bit from things like the tariffs, which are still ongoing, things like the US debt restructuring issues, which are still there. And obviously, around that is they're going to come back to the surface once, I guess, there's a little bit of news fatigue around everything going on in the Middle East as well. Just trying to focus on the market in real terms and dollar terms and company specifics anyway.
So on the local markets, look, yet again, the focus has been on the largest stock in CBA, just continues to push higher and higher, which does actually drag the market higher as well. Yeah,
exactly. So hit 192, very close to sort of 200, catching up to Macquarie's share price almost. It's had a phenomenal run to have that sort of performance over the last year for such a, large, quite well-established business as well that's not doing anything overly groundbreaking like a Nvidia or anything like that. It's really quite interesting. A lot of flows are passively flowing through to the company, potentially from overseas, maybe with the US market, getting heightened risk. You might see some of those Japanese investors come through and picking up the largest names on our market, like a CBA, especially considering the other larger names in the mining sector have that China risk as well. So it is somewhat surprising to see it up that high, but I guess if you look at the risks to CBA, there are very little.
Yeah, nonetheless, if you haven't participated in that, it's been a bit of a painful trade to watch, hasn't it?
Yeah, it's I don't think it's one that too many have called up to 190. That's for sure.
Elsewhere, we had news yesterday, Xero expanding further in the US. Is going to need to fund that as well. What do you see?
Yeah, so capital raise happening at the moment. That's suspected to go quite well, obviously. They're also going to have a share purchase plan on the back of that, so allowing those sort of those retail investors that have been holding the company and loyal support base for quite some time. So they're basically, I think it's a capital raise for a good reason as well. They're picking up a fast-growing business in the US in a very similar space, in the sort of payroll transactions area. And I think with Xero, all it really needs is its foot in the door, and then the product and the business model really just operate themselves. Once they get those clients, they're quite sticky. The product's great. The business model works quite well. That software as a service, and they're very smart in managing how that grows with the balancing of profits. So. I think it's only going to replicate the same success it's had in Australia, in the US. The company's talking about doubling its revenues over the next 3 years, which again, we just spoke about CBA having a great run. Doesn't necessarily mean it stops. Xero's actually had a really good run of recent, and it's had all-time highs. But if it can have those big catalysts that do double the share price over a 3-year period, and it's doing those with balancing profits, I think it's one that just continues to go higher over the long term as well.
Now, Josh, elsewhere, those defence stocks have clearly been in focus, particularly given the geopolitical crises that have played out. And locally, our focus has been Drone Shield. Obviously, drone warfare becoming, increasing. And it has had a really impressive contract win.
Yeah. Well, the drone, attack and defence, it seems to be sort of the number one thing for this war these days anyway. So it's no surprise that it's had a lot of attention. But I think now I did a virtual event for the 3 Stocks 4, which were focused on defence, and really spoke about how the company is coming into its own fundamentally. You look at that contract it picked up, it's equal to last year's revenues. So it's really quite significant. You're starting to see the actual revenues and the cash come into the business start to match that market cap. We saw back in 2024 there on the chart that it has been this high, but that was when the company was at a very different stage fundamentally, and it was a little bit more speculative at that stage. But now what we're seeing is that maturity of the business, and those revenues really starting to stack up to the market cap anyway.
Are there any other defence?
Yeah, we're liking Austral, especially with a little bit of a takeover play there potentially. It's gone from strength to strength. Very similar concept of just continuing to pick up more market share. A lot of government spending in that area. We've seen Drone Shields was with the European market. The European market's probably the biggest attraction for a lot of the Australian defence companies as well. So they're all ramping up their spend. So I think that's just going from strength to strength and operating on a very similar business model of just picking up those contracts from the stimulus.
And Josh, given that geopolitical risk has now been priced out, how do you view particularly energy and gold stocks at the moment?
Look, it's not an area of focus for us right now in the energy sector. I just think the risk is too high. We saw oil up and down 9% each day. You really are betting on this conflict and which direction it's heading, and sort of certain conflicts leading to shipways getting shut down and that sort of thing. So I just don't think it's worth the risk to reward. We're sort of more so leaning towards. I think the tech sector is just going from strength to strength. Nvidia is now the largest company by market cap and at all-time highs, and that's pretty much pricing in zero sales to China, which is really quite crazy when you think about it being the second largest economy. So I think there's further upside in Nvidia and then the tech sector in general following that. So I think once Trump's done, I think that China reopens for Nvidia anyway.